So what is Project Nebula? Think of a mutual fund or an equity portfolio, but all aspects of a stock's research is managed entirely by an AI or an LLM. That is exactly what Nebula is. It is an attempt for creating long-term wealth-generating equity portfolios using AI. Let's cover the steps in the pipeline of Nebula. Initial steps include selecting a universe of stocks and gathering all possible data regarding them. Few examples of said data are on your screen, such as financials, announcement, fundamental ratios, transcript, website updates, news, investor presentations, credit ratings, etc. Exactly how does this scraping work is shown later in the demo. Next, using the scraped numbers and the textual corpus, we perform a financial check and the LLM's analysis. For this experiment, however, we are sending in all the data to the LLM along with specific thresholds for the financial check. The most important part of this LLM analysis and Nebula as a whole is something I call the Nebula framework. These are basically a set of rules, criteria and requirements that define our investment philosophy. It is what we want the LLM to look for in the data corpus. This acts as a differentiating factor compared to other AI stock analysis tools, as we are not betting on the LLM's investment capability but on its rule following and basic reasoning capability. Next, the share scoring follows a two-step approach for generating a final score rating for the share. As shown in the previous slide, this experiment's investment framework, inspired by Motilal Oswal's QGLP framework, consists of 25 questions. For each question, a correlation report is generated which matches the stock's data with the specific aspect of the stock's analysis. Finally, an evaluation report is generated using all the 25 correlation reports, which contains the share's final score. Alright, let's see how the data scraping works basically. Here I have my API running, which will scrape all the data from the official NSE website. So for example, if I enter a ticker, say VBL here, so you can see it is scraping the XBRL filings which have the financial quarterly results, and based on that it will calculate any sort of ratios or even raw metric we want. For example, here we are basically displaying all the EPS, quarterly EPS from 2018 to 2024. Okay, similar to the financials, we can scrape the announcements also. In this particular example, I have added an additional filter to get just the investor presentations regarding the ticker. So you can see it scraped the announcement from the NSE website and then it added a filter to get the investor presentations. Now let's have a look at the data we are sending to the LLM. I call it a data report. This consists of two parts. First is the announcements that we scraped. More specifically, I'm sending in only the investor presentations and the con call transcripts. As you can see, we have extracted the text from the documents, and along with that we are also sending the date that the document was released. That's the first part of it. And secondly, the financials that we scraped, we're using them to calculate some financial ratios. As you can see, we have P, PEG here, EPS growth, PAT margins, EBITDA margin, ROE and debt to equity ratio. Now in the LLM prompt, we are also specifically mentioning to focus on the most recent relevant data. Now the fact that all the data here is already properly dated, it will be easier for the LLM. Finally, let's have a look at the reports that the LLM is generating. The first one is the correlation report. This report essentially tries to match the information in the data report along with our investment guidelines and frameworks. This checklist, you can see, shows that the LLM is actually not making a blind shot in the dark about the stock analysis, but at every step it is trying to match that stock's information with our investment requirements that we have mentioned in the guidelines and the framework. This is the first kind of report, and secondly is the final evaluation framework. Sorry, this document isn't the most well formatted. However, you can see that after the entire correlation of all the aspects which we gave in the framework, it came to a conclusion that this particular stock actually matches 78% along with our investment requirements. Let's take a look at some of the scoring results. I ran the entire pipeline on the following listed shares data. And while it's possible that the exact values of these shares might be a matter of debate, I feel it is safe to assume that the generated rating scores fall in line with the general consensus and perception of these shares among investors and equity researchers. Future work includes testing the pipeline on an entire index such as the Nifty Midcap 150 and backtesting the pipeline on 5 to 10 years worth of past data. I want to point out a potential challenge that I might encounter. It is that this entire pipeline is actually quite expensive. If we take a look at some of the numbers, so if I want to run it on an index, say Nifty Midcap 150 shares, so to run it on the entire index I would actually require 4000 prompts, and if I want to backtest it on say 5-year worth of data, it will take me 2.3 lakh prompts, and 10-year worth of backtesting needs 4.6 lakh prompts. So that is definitely a challenge because that would require a lot of resources, but let's hope for the best. Thank you.